Today, we're diving deep into one of the most important events in the world of Bitcoin, the halving. Specifically, we'll explain what Bitcoin halving is, how it works, and most importantly, what it could mean for Bitcoin's price in 2025. First off, let's break down what Bitcoin halving actually is. Bitcoin halving is an event that happens roughly every 4 years, where the reward that miners receive for adding new blocks to the Bitcoin blockchain is cut in half. In simpler terms, every time a halving occurs, the rate at which new Bitcoins are created gets reduced. This has been built into Bitcoin's code by its anonymous creator, Satoshi Nakamoto, to ensure a fixed supply of only 21 million Bitcoins will ever exist. As a result, the total supply of Bitcoin is capped, and halvings help slow down the inflation rate. We've already had 3 halvings in Bitcoin's history, one in 2012, another in 2016, and the most recent one in 2020. The upcoming halving is set to take place sometime in April or May 2024, and when it happens, the block reward will drop from 6.25 Bitcoins to just 3.125 Bitcoins. So, every time there's a halving, miners get fewer Bitcoins for the same amount of work. But what does this mean for the price of Bitcoin? At the core, Bitcoin halving is a supply-side event. When fewer new Bitcoins are being minted, the supply of new coins decreases. And, as the law of supply and demand tells us, if demand stays the same or increases, a decrease in supply tends to push the price higher. This is one of the reasons Bitcoin's price has historically experienced significant upward movements after each halving. For example, after the 2012 halving, Bitcoin's price surged from around $12 to over $1,000 in 2013. Following the 2016 halving, Bitcoin went from around $650 to nearly $20,000 by the end of 2017. And after the 2020 halving, Bitcoin's price exploded from about $9,000 to an all-time high of $69,000 in 2021. Now, I want to be clear, past performance is not always indicative of future results. But the pattern we've seen after previous halvings shows that a decrease in new supply, combined with continued demand for Bitcoin, has led to price increases. So, what's going to happen with the 2024 halving? Well, there are a few key factors to keep in mind. First, we need to look at Bitcoin's adoption rate. In 2020, we saw institutional investors like MicroStrategy and Tesla starting to buy Bitcoin in large amounts. That trend has only continued, with companies and even countries getting involved. As more mainstream adoption occurs, demand for Bitcoin might increase even more, especially if Bitcoin is seen as a hedge against inflation or a store of value. Second, there's the halving itself. With fewer new coins being minted after April 2024, the existing supply of Bitcoin becomes more scarce. If demand remains steady or grows, the pressure on the price could lead to upward momentum. But, there's also the buy the rumor, sell the news effect. Leading up to the halving, many traders might start to speculate on Bitcoin's price increasing, which could cause a price run-up before the actual halving. But once the halving happens, there could be some short-term volatility or even a price correction as people take profits. This type of pre-halving hype and post-halving pullback is something that's been observed in previous years. So, we could see the same thing happen in 2025, where Bitcoin's price increases leading into the halving, but experiences a short-term dip afterward. Another thing to consider is the broader economic environment. If inflation continues to rise or if traditional financial markets face turmoil, more people may turn to Bitcoin as a safe haven. This could provide additional upward pressure on the price. That being said, there are always risks to consider. The biggest one is that Bitcoin's price might not follow the same pattern as it has in previous halvings. Market conditions are always changing, and there are factors we can't predict. For instance, if there's a major crackdown on Bitcoin or cryptocurrencies from regulators, that could suppress demand. Or, if technological advancements or competitors come along that make Bitcoin less attractive, the price could stagnate or even decline. We also have to consider the increasing competition in the crypto space. While Bitcoin is the leader right now, newer projects with faster, cheaper transactions or different use cases could steal some of Bitcoin's market share. So, in summary, Bitcoin halving is a big deal. It reduces the supply of new Bitcoins entering the market, and if demand holds strong, it could drive the price up. Historically, Bitcoin has experienced price increases after halvings, but there are no guarantees. 2025 could be another bullish year, but it's important to keep an eye on market trends, adoption, and any external economic factors. If you're planning to invest or just want to understand the potential impact of the 2025 halving, be sure to do your own research and stay informed. The crypto market is volatile, and things can change quickly. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss an update. What do you think will happen to Bitcoin's price after the 2025 halving? Let's talk about it.